Good evening, everybody. This is John Locke from Locke in Your Success, and this is the Locke in Your Success Trade and Market Update for December 15th, 2013. Before we get going, I'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, any trades and or results covered in the presentation may or may not be live trades. In the event anything's computer simulated, we do the best we possibly can to make sure that we are accurately represented as possible. And also be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Well, we are testing out the GoToMeeting webinar format this week because we're going to be switching over in 2 weeks, the first week in January, on to this format, and we'll be doing the webinars on Monday morning, and I just want to test everything out and see how it works. I'm glad I did because this is my 4th time taping this, and therefore be aware that things may be a little bit rocky, but they'll smooth out as we go along. All right, let's just move on, and we'll take a look at the markets from here. If we start with the SPX, we were expecting last week relatively sideways movement. We got down, the market went down last week, obviously. However, it is in the sideways range that we were thinking. So more than likely, we're going to continue in a sideways range in the SPX going forward. We may come down a little bit lower into the 50-day moving average, into this other trend line here, maybe even a horizontal support level. But, 1775 certainly is a nice resistance range, support range, and we really have a support range all the way down into the 1725 level. So for this to grind down wouldn't be a big surprise. However, I am expecting to hold somewhere between 1750 and around 1815-ish for the week next week. If we take a look at the Russell, same thing. The market pulled down a little bit faster and harder than I expected. I thought it might hold up for a little while. If you look, we were looking at a target close for the month up here around 1150. I think that I will be wrong this month. And I think I told you I was expecting I probably would be wrong because I thought around 1135 was going to be the top of the Russell here. And we shot up a little bit higher than that, but that looks like we kind of topped out, at least for now. I'd expect the same thing here, continued sideways movement. Be kind of interesting to see if this channel holds. If it breaks down, then we have a much better support level here around 1075. If it holds, then we may bounce back up to our highs here. This week, though, like I said, I would consider us still going sideways. We'll have to see if this holds or not, but we should be in a sideways range here, albeit a rather wide sideways range. The NASDAQ still looks very, very bullish. We broke out a little bit higher than I thought we would. We're coming back down, testing the 20-day moving average. I still think this also runs sideways. We can bounce back up, maybe test these highs, but from there, that's about it for the NASDAQ as well. We're hitting some longer-term headwinds in all the indices right now. And when we look at the Dow, I'm sorry, I blanked out there for a minute. If we look at the Dow, we just came back down to a horizontal support level. We did break a little bit of a shorter-term diagonal support level, but this certainly is a stronger area. We also have the moving average coming up here, or the 50-day, and we have some just a lot of past action in this range all the way down to 15.5. So again, we're in some consolidation, sideways-ish type of a pattern here. Not going to hit our target. Well, we may do it on the Dow. In the general, I'm going to be off a little bit on my month-end calls, which is a good thing. I can't be right every month, so this is all going well. Let's take a look at the positions here. We'll come over and we'll start with the V condors. January V condor has had no adjustments since it's been opened, and the trend continues. We've done absolutely nothing. Market's just kind of sitting in the center of the position. We're up about $1,600. If we take a look at what's going on, we are smack dab in the middle of the V here. If we spend too much more time here, then I will be widening this out. And since I do think we're going to be in a sideways range, it probably isn't going to be too long. Probably the end of this week, if the report on Wednesday does not move the market either way, then we'll start widening this out. If it does, then we'll just ride with it. As far as our other January trade, we have a January Bearish Butterfly. That is looking like this. We have shorts at 11.20. We have shorts at 11.40. The market pulled back quite a bit. We're up about $4,800 or so, and if that's as of Friday at 3:30. If we take a look at the position and the analyzed graph, we're just looking like this. We were down a little bit further earlier in the week. We never exceeded our adjustment point, and we had our bounce. So here's how the position's sitting here. Everything is looking really nice, especially if we continue sideways move in this range. That'll be great. If we kick backwards, I may end up having to go back down to one contract here. We shall see how that goes. If we come into the December M3, this did get some moving around, so let's take a look at that. That's this one here. That's the one we're tracking. Let's shoot back to Monday, just so I can show you where we were sitting and where we are now. We've actually made no progress profit and loss-wise because of the large move we had, but we're up 2,700 at the beginning of the week. Here's what the position looked like. We were quite widened out, and the market, we thought we did have a target price of the market up around 11.50, so that would have worked out quite nicely. We could have widened out a little bit more, made some money. But things don't always go as planned, and the market came down on us. When it did, because we're getting fairly close to expiration, we're only 10 days on Tuesday, we're 11 now. If we go forward, I didn't really want to start rolling butterflies and stuff like that. I was just being lazy this month. It is December after all, and I think we're all kind of busy. So instead of actually rolling anything back, all I did is I ended up just taking the call off. And like I said, I only did this because we're near expiration. So if we go to the end of the day on Tuesday, we pop into this position here, which looks like a broken wing condor. Notice the call is gone, and we're sitting here like this. This is actually a weekly trade that I do, which that's how easy it is to convert it. I just pull the call off, and this is something that I'm very comfortable in, and it's a very comfortable position for me. So I was just going to trade it into the rest of the week this way. I may end up adding the call back on if we bounce too much. But so this was Tuesday. We just dropped the call, and the market was down a little bit more a little bit earlier in the day, and our delta was a little higher. I wasn't right in the middle of the position. So, but anyway, this is what we look like on Tuesday. On Wednesday, we had that really harsh down move. When I'm in this position, all I usually do is I start rolling the shorts away. So as the market came down, I took the 1100s down to 1090 and then down to 1080 because it was almost a 20-point down day. If you look at our T-log, you can see right around 10 o'clock and then right around 11:30, I just went ahead and rolled those back. And that put us into a position that looks like this on Friday. You see the shorts are back down to 1080, kind of narrow here, taking risk off the table, coming into expiration because the trades do get kind of risky there. And this is what our position looks like right here. Again, this is a position I'm very comfortable trading in a weekly environment. All right, let's go to our next trade, which is the December Bearish Butterflies closed. Closed that at a profit earlier. If we go to December V trade, I didn't have to do an adjustment on this, but I did do one. If we look at this just early in the day on Friday, we would be positioned this exact same as we were last week. Let's go early in the day. So I will just go to Tuesday at 12:30 because that's the time we hit. So Tuesday at 12:30, we had our position looked like this. We were short the 1180s, and we had some 1150 call on. We had a 1030 put on, and we're short the 1000 puts. And if we look at the graph, this is what we look like. The likelihood of us having these shorts in danger at all are extremely low. So that being the case, I went ahead and I sold the straddle out. I figured if we kept it there, we have $3,340 at expiration, unless of course the market moves up enough to come up into here. It might still do that, and I may regret selling these off, but we shall see. I decided to put the extra money in my pocket, which wasn't a whole lot. It was a few $100. And if we come to now, our expiration value is going to be $34.63. So if the market's even somewhat reasonable, that's what we should be end up with this for the month for this trade. If it obviously goes too far, then we'll just shut the thing down. But everything looks fine right now. And last but not least is the December ROCK trade. This trade had a little bit of trouble this month with the market kicking back and forth on us, but not too bad. It's just not going to be a really good month for it. So if we come back to Monday and we look at our position, we were at 1110 and 1150 butterflies, 10 each. And if we take a look at this here, this is a real nice position. The market stays kind of stable. A lot of profit potential still. But what happened is the market came down fairly hard, obviously, it came down decent actually on Tuesday. So if we go to Tuesday at 3:30, I must have done it a little bit later in the day. You can see our delta is well over our, usually around 100 we look at adjusting this. It's 167, so the market's come down quite a bit. And this is where we're looking at here. Earlier in the month, you remember we had rolled half of these 1110s down to 1090 to push ourselves into, so we start getting ourselves into cat position to start widening out. Well, that's what I did this day. When it came back down, I figured we might be in the same chop. So if the market came back here and reversed again, I was still looking pretty good. So I'm still pushing some decent delta numbers here, but like I said, we didn't know the market was going to come down the next day. So it's within acceptable range. So the next day when the market came down, I rolled the rest of these 1110s back to 1090. And you can see that here in the T-log. It was around 10 o'clock as well. At the same time we were adjusting the M3 position. I do get intraday adjustments in here on, this close to expiration, especially with an 18-point move on the Russell, that close to expiration. So if we just push this to Friday at 3:30, you'll notice that all my lower butterflies are down at 1090 now, and our profit is only about $775. This is going to be a skinny month for the ROCK trade probably. I would guess that I'm going to expire in here around positive $1,925. We may make a little bit more if it comes down here. I could push it and try and get more money out of it, but it's been a really, really good year overall, and except for, the Bearish Butterfly got beat up because it's been the strongest up move in history. So that's not good for a bearish inclined trade. Coming into next year, though, we loosen up a little bit and start running a little bit sideways. I mean, January Bearish Butterfly looks beautiful, and I would say that trade's going to look really nice all year next year, or at least for the good part of the year. So things are a-changing. But for this month here, we'll probably take a small profit out of this. We could take a loss if it moves hard, but it's looking good. And that is all the positions that we have on, and we are expecting a continued sideways market movement. Next week, I'm going to come in and do this webinar format again. I may take a couple of questions that are emailed in, but it's just going to be me on next week, and it's going to be Sunday night. And then the following week on Monday morning, we are going to attempt to do a live Monday morning webinar, and we'll take some live questions. We'll do something like this, kind of go over all the positions, what I think of the market. We'll take some live questions, try to keep it under an hour, and yeah, then we'll post it for you and have a recording. All right, so I hope everybody has an awesome week trading. Send in any questions for next week if you have them, and maybe we'll answer a few questions there. And that's it. All right, have a good night, everybody. Bye.